Rate cut brings mixed reaction across financial sectors. Credit card securities firms welcome change, while banks feel strain. The end of the Bank of Korea's prolonged policy interest rate freeze is bringing mixed reaction across different financial sectors. While some sectors, such as credit card firms, may benefit from the change, others, such as banks, are apprehensive about the potential impact on their profitability. The central bank lowered its key interest rate by 25 basis points to 3.25% Friday, in its first rate cut since August 2021, in an effort to boost economic growth, according to a report released by the Korea Investor Service on Sunday. Credit card companies and the capital finance industry are expected to benefit the most from the interest rate cut. Since credit card and capital companies do not have a separate deposit function, they raise funds primarily by issuing bonds. A reduction in the benchmark interest rate typically leads to a decline in market interest rate, which is likely to alleviate the cost burden of financing for these sectors. The securities industry is expected to view the change positively, as an interest rate cut typically leads to an increase in demand for riskier assets, such as stocks. This can result in a rise in trading volume, boosting the revenues of brokerage firms. On the other hand, the banks and insurance companies are sectors that do not welcome the interest rate cut. For banks, the difference in the speed at which the benchmark rate reduction is reflected in loan and deposit rate can lead to falling interest margins. This narrowing of their margins raises concerns about deteriorating profitability, as banks may face lower earnings from loans while still paying interest on deposit at competitive rate. Insurers also view the interest rate cut unfavorably. BOK lowers policy rate after 38 months. With the U.S. making significant rate cut, the BOK no longer had a strong reason to maintain high interest rate, said the Chu, director of the Hyundai Research Institute. He added that he expects the rate to remain steady for the rest of this year, with a potential cut next year. Reflecting the concerns, we also downplayed the public expectation for the real estate market, warning that the likelihood of the base rate returning to the previous level of 0.5% is extremely low.